Hi, my name is Christopher Terry, CEO of iMarkets Live, and I want to spend a little time in this video reviewing some of the things that I do that will help you with the Harmonics scanner. Now, first things first, at the bottom of your screen on the right, basically what we want to do is get this in a full screen mode so you get to see everything. All right, just take your time, get it set up. And your charts essentially looks like mine at this point. If you've set up the Harmonics scanner, everything I have here, you have the same setup. The only difference is my colors may be a little bit different. Now, what you can do with your colors, you can go look at your, go back to your expert advisors, hit properties, and you could change the colors if you watch the other video. The purpose for this video is just how do I look at patterns, why would I look at certain things, and how I look at entries and get you guys in the right mode, in the right direction. This is going to be a real important video for you going forward, as I want each and everybody who uses the scanner to have the utmost success and understand Harmonics as I do. We're going to have tons and tons of videos coming out, so as time goes on, we're going to build a phenomenal library. We have a live trading room that I'm not sure if you guys know, but each and every day, 8:30 a.m. to 9:30 Eastern, we have our trading room, and from there we have we show harmonics, we show everything. So please come be part of that. What I like to do is I like to look at the markets that are in a trend or not in a trend. So let's take this time to explain harmonics a little bit better for you. Let's look at the blue. Okay, so the blue here. So in the markets trend, they go from low to high, right? We know this. Markets go from low to high, but they also go in waves. The markets will go, and let's just change some colors so we don't have the same color. Let's just do red. All right, markets go in waves, and they do like this. Okay. So typically, when we look at the markets, and I'm going to be educating you at a level that you should be learning here. So please take to heart everything we talk about and study it. Markets go in levels of a 0, 1, and let me see if I can make that a little bit bigger here. I'm sitting here with my golden retriever, so if she happens to bark behind me, we'll clean all that up. 2, 3, 4, 5. All right. So markets typically work in waves of 5. From that, typically what we would see is a market correction, and let's look at it with a green. So from here, markets come down. Oops, let's not do that. Let's do it with a nice brush here. Okay. It goes down, okay, goes up, and goes down. So this is what we call an Elliott wave, where you have your 5 wave, and then you have what's called an A, B, C corrective mode. And typically this happens prior to the market resuming its trend to the upside. Okay, so that would be my trend back to the upside. And the markets would then have their, and just forgive me, I have some windows open behind me. It's absolutely beautiful outside. When we look at the market like this, the market has its larger trend. You have 5 waves up, A, B, C down. Typically, you either would get an ABC down like that, or you'll have 1, 2, 3, 4, 5 before the market continues to make its waves up. That's how the market works. It works in waves. Let me erase those last things I showed you. When looking at the markets and you have these corrective mode, this is what's called a bullish market. Bullish market means you're making higher highs higher lows, higher highs, higher lows, higher highs, higher lows, okay? And after you've completed that 5-wave up, then you start to get the correction. In the Elliott world, typically the first pullback is sharp. The next pullback, what we call 3 to 4 wave, is a correction like that. And then you have a higher correction like this. In the correction, in this particular, the 3 to 4 wave and the 5 wave, typically you would get these 5 waves between the market structure. So you would end up seeing something like this. Let me draw this in so you understand. Let's see if I could do this. Here, here, and if you think about it, that is what's called a butterfly pattern, right? Here, we would look at this, and I'm going to erase this so we keep a clean chart, okay? In here, we have this structure, this ABC corrective wave, and this is from Elliott wave. If we were to take this low and attach it to here, well, not there, and we take this low and we attach, and we attach this to here like this, and then let's just say we did a thin line, okay, something like that, and something like this. This is what's called a Gartley pattern, where what is important is how it's labeled. This is, in this structure, in its essence, Elliott wave, but in a harmonic structure, if we look at it, we have that harmonics where, let me just draw this out, we have your X like this, right? Everybody sees this on the internet, right? And that's what people look at. They don't realize, most people who I work with or taught or communicate with don't realize. They're always trying to pick the bottoms in harmonics and they lose. You want to pick it a structure within a trend. You want an established trend so when they do get their correction. So where in the past we had the 4 and 5th wave, what we end up doing is calling this an X, A, B, see what we're doing, writing over this, C, D, X, A, B, C, D. The structure here now would be if this retraced 38 to 50%, that would establish the fact for a bat pattern where the next swing would possibly come down here, 886, or if this went 618 from the XAB retracement, that would establish the fact that this becomes a 786 and this is a Gartley pattern. If for some reason, for instance, let's just take this a little step further and let's look at the green here one more time. If for some reason this had a deeper retracement, let's just say it, let's do this. This had a deeper retracement like this, okay? And then up, and then down, okay? Something like that. Then what we would end up having is called a butterfly pattern. You see? And all the harmonic structure is you're looking within the trend mode. You're looking to stay within the structure of a trend. Sometimes it does happen that the market needs to push below a prior swing low before it starts to turn back up. This is all price action. This is all ratios from Fibonacci, trend mode, depending on how big the trend is, how wide it is. There's other factors, but in essence, you want to stay in the direction of the primary trend. The primary trend is up, and you're looking for pullbacks along the way, looking for patterns to form. The trick is how to enter the patterns. That becomes an important factor. Let's just say you have an area here where the market went in and you want to know how to enter the trade. So let's just say we'll take it onto the side here Okay, let's just push this to the side. All right. And we're going to give a couple of scenarios. That's your entry, and here's an entry zone. All right. And let's do this. Let's make it more realistic. Here's your stopping points. Okay. There's your stopping points, and this is your entry zone to watch. Okay, whether you have one entry or two entries, however it may be, it's okay. Meaning that if you have a zone to enter or it's just one flat number, depending if it's a crab or a butterfly or a bat pattern or a shark pattern. You want to look at the markets and you want to know when to enter, and that's the most important thing of harmonics, right? So let's take a look. Markets trade in waves, and let's just say you got your push down into your zone, and here fire engines behind me or something. So you're looking at your entry here. This is your zone where you say, okay, I'm going to enter into here. Do you just buy here? I think not. I think it's more important to let the market stop going down and shift its momentum before you do anything. You have two ways to look at this. One is where the market comes down into the zone and continues to flush down. So if you buy it here and it flushes down, you get stopped out. This is why I like to look at certain charts. I don't like M15. I don't like the 15-minute charts for a primary entry. When I do it, I understand why. When the average guy who's brand new does it, more times than not, the whip is so wide because you're dealing with a Forex market that's very volatile that they could stop you out. I like dealing with H1, the hourly charts, the H4, and the daily charts. I like using these charts. These are most important to me to use. Okay, just keep in mind the lower time frames are very difficult to trade with unless you're really a professional trader. Now, let me get this set up. So let's just say the market comes down and then it shoots back up. It shoots back up. What you just did was you established the fact that the market has found some support. Don't worry about that you missed the trade. You didn't miss the trade. What I like to do is see the market pull back. Maybe even pulls back in a little wave or something like that where the market pulls back. I like buying the pullback. Once the lows are established in our pattern, I like buying that first pullback. There is nothing wrong with it because you could define your risk. You could define the risk here or here. The fact is, the market went down, had a strong shift in momentum, and that first pullback. Now what I do is if I'm watching an hourly chart or higher, and we had a turn, I would then drop down to say a 15-minute chart. Because the market shifted on the higher time frame, I'm looking for a lower time frame to enter. That's where you get your best bang for your buck. Now, dealing with an hourly chart, a 4-hour chart, they take time. The other way we can look at this is, let's just say the market had a push down into the zone, right? It pushes down into the zone, pushes down a little bit past, comes up, and tests down again, or even puts a higher low. What I like to do is I like to establish a point right here that when this market turns back up again like this, I like to buy the breakout to the upside and then put my risk below. Patience is the key. When you're dealing with any trading vehicle, you just don't arbitrarily jump in and jump out. You're looking for the market to establish a support. The harmonic patterns are trying to identify zones. Just because it hits a zone doesn't mean you want to enter right away. You want to be patient. Okay, it's real important to take the time and be patient and not try to force the issue and just jump in arbitrarily. So you're looking for this. You can either let the market break out up like that, and then also you can let it pull back. You're trying to establish the fact that the market has found a support and has shifted a momentum up. Keep that in mind. When you're getting these bat patterns and Gartley patterns, you want, the most important thing is the entry zone, what they call the PRZ, the potential entry zone. It's not really taught so much out in the industry. Believe it or not, you can search YouTube up and down, you can search everywhere, because not many people are really understanding how to enter the market. If you actually can do a search on it, I'm probably one of the only guys that puts it out there free on YouTube. Well, I had put it free on YouTube at the time. The point is, you want to always establish the fact that the market stops going down before you enter. Okay, I had stopped the video for a minute, and we're going to continue, and we're going to look at some actual charts here right now. Let's take a look at the scanner again. The point is, we want to make sure that the markets shift their momentum. So let's take a look at a trade we actually did for our live trading room. Although this was on a 15-minute chart, I want to point out a few things to you. So let's just go to this chart right here, and we put in the USD CAD. Okay, there we go. All right, now I was showing somebody earlier, and it motivated me to create this video. Okay, hold on one second. Okay, so what we're looking at here is the USD CAD. I'm going to show you a trade that we did in our live trading room on October 6th, 2015, during the course of the day. So those of you that were there can remember this. Okay, so what I did was I took this chart and I made a copy of it. So I put it on my Paint program so we could just do some chart work. Made it a little bit easier for us, right? Let's do this. Okay. What do you guys think? A little bit thicker? There we go. Okay, so let's take a look. So the market basically had rushed on a reversal straight down. Okay, but before it did, it put a little bit of a low, it put a reaction up, and then it had a whole nother drive to the downside. Okay, market had a second wave, and then again, and then again. Okay, so what we can look at is, if we were to paint this in, let me just use my little paint here. We would look at this as a 0, a 1, 2, a 3, a 4, a 5, right? That's a 5 wave. 0, 1, 2, 3, 4, 5. What would happen from that point is, let's just use my little paintbrush here, make sure that's right. All right, so then we had A, B, C corrective wave. You see how that works? A, B, C corrective wave. Of course, I used a pencil that doesn't match with the colors, so let's just do this. A, B, C corrective wave, and then down. So the fact is that the market had its Elliott wave on the way down, 1, 2, 3, 4, 5. You always want to know what part of the trend you're in. And then you have your A, B, C, and then down. Since this market had structure here, had prior highs up here, that's a very important area to watch. Okay, sideways line, back down. So that is what the structure looked like when we were looking at the markets today. So when we looked at the trade, we had a retracement up, and basically, essentially, we looked at the prior high. That's important. When you're looking at trading harmonics or anything, you want to look at what's the prior conditions. Is this resistance? Are we getting a little push up? So if we were to insert the Fibonacci, the shapes, the little triangle, what would we have? We would have this, 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 and then shapes this, this, this. We form that little XABCD, what's also called the shark pattern, all right? Which is a great trading vehicle. I love it. But the fact is, all the ratios tied into this particular area for the shark pattern and also into a major structural point. If we look at right here, this little area right here, the little structural point right there. Look how small that arrow is. That's weird. Seriously? Okay. So the market tested a prior structural point. It's happening again. Let's take a look. We just want to put it in here. Right there. So even if we didn't have the harmonics, you had a major high right there. Real important. This is real important. And what we want to also look at is the fact is the market is in a downtrending market. You're in a downtrend. Lower high, low, lower high, lower lows, lower highs, lower lows, lower highs, lower lows. Again, you see, downtrending market, rallies are shorts. So those are the prior conditions, and then we look at our scanner. So I'm always looking at the scanner and not just taking it at full value, face value. You can, but that's just how I do things. I like to look and say, okay, what are the prior conditions in the market? What had happened? So when my scanner puts ideas out there, I look at prior swing highs, I look at prior swing lows, I look at this. You see that? Little high, little low. I'm building, similar to a lawyer, I'm building a case that why I should short, period. So when the market went up, we took a look at a couple of other things. Okay, I'm going to take a picture here. I'll take a snapshot there, and we'll paste it right there. Okay, so let's take a look. All right, so take this and we'll draw a little thicker line. So what do we have here? 0, 1, 2, 3, 4, 5. You see that? Market likes to work in 5 waves and likes to work A to B, C to D. A to B, C to D. The market loves to work A to B, C to D, and it likes to work in waves. Period. Watch, look. You see? It likes to work in waves. That's just what the market likes to do, and we just do what the market wants. It's very simple. You just follow along with the structure that's put out there for you. So looking at this morning, when I looked at the trade, we're into the zone. They found resistance at the prior swing high over here, and we hit our zone. We had the complete zone. These are conditions that I look at. So let's take it to a smaller time frame. Okay, let's take this to a smaller time frame. All right, and we can establish what happened this morning. Actually, let's do this. Let's just leave this on a 15-minute chart. And let's go here. Okay. Let me just get rid of all these little objects and we'll start it over again. All right, so we'll establish the fact that the market swing high was here, and that's where also the resistance came in. All right, that way we can take a picture and we don't have to have all this other noise. So we understand this, okay? Let's go back one more time. Take it down to a 5-minute chart, even a 1-minute chart. I look at every little time frame. When I see a shift in momentum, I take it down to the littlest time frames. You see, we're trading the big time frame, but you're looking at what? The littlest time frames. You're always looking at the littlest time frames that establish a trend. All right, so let's take a look here. I was asked to do a video about this because it's important that we're all on the same page. Okay, that you're all on the same page and getting that right education. Okay, so this morning when we had looked at the trade, and you're going to be looking at this video in the future, it's just something that we did. When I saw the market find or test into our key resistance zone, that was an indicator to say, okay, let's see what happens. Let's see what happens to the market. Let's see if it continues. Let's just see if this stays above this resistance point right here. And remember, we also had all this data right here, right? We had all this data on the screen. And we had all this data. We saw it push, we saw it back off, and then that little bump up. I went right to the smaller term time frame. Smaller term time frame right away. First thing I did. And then watch, I like to look at shifts of momentum. Okay, so keep an eye on this. All right, here we go. Market went up, down, up, shift momentum, up. You see that? Now I'm going to show you something else. Even though this is a 1 minute chart, I'm still trading on the higher time frame. I'm looking for an entry. I'm looking for an entry. Okay? I'm looking for an entry. And what this does right here, this is called an alternate A to B, C to D. This is, let me just fix this right here. This is an A to B, C to D. This also established the fact that this is the first possible lower high. Remember, we went into a short area, a zone. What I was looking for was a shift from the market going up to shift back down very sharply and sharped back up. That set up the opportunity to enter. And then that's where the market started to trade its way to the downside. Okay, so I look at all time frames. Just because this market had set up on a 15-minute, you don't just blindly, you never just blindly jump into anything. You never want to do that. Something like this where it has tested this zone and it's even over here, it's fine to jump in. You've established a resistance point and you can establish a resistance point here. Not a problem. Let's see what else we got. All right, something like this, we want to see it stop going up first. This is still in that process. Let's take a look. Let's take a screenshot of this. All right, and let's just establish a new one of these things. How about that? All right, okay. So let's take a look at what we're dealing with. This is CADJPY, and how do I look at it? All right, how does Chris Terry look at this, and why? I'm looking at waves. I'm looking at waves. I'm looking at waves on the way up. Maybe this right here was the first wave up. Okay. Then we had this. Okay. Wave 2. 0, 1, 2, 3, 4, 5. Okay. 5. So technically, you have to question, is this, and then we have that, and this? This is how I roadmap it out. We don't know that's going to happen yet. This could still be within that 5 wave. This could still be in the context of this whole move up. If that's the case, there's no reason to even jump into this yet. You want to see that lower time frame shift its momentum and do something like this. Okay, come down a little bit. Maybe come up a little bit. All right. Once the highs are established, then you can start looking at shorting opportunities. And you take them to a much lower time frame. For instance, here's your pattern again. Let's take it to a lower time frame. All right. We see where the structural high is, right? And this still looks like it's trying to go up. I would not try to short this. I want to see the market stop going up and reverse. Okay, here's another one, another pattern. All right, so there's nothing wrong also with looking, and I want to make it clear, there's nothing wrong with looking at a chart, and let me just see here. Something like this. You're looking at a chart where it had a spike here, up, down, that you're looking for an entry zone. Sometimes you miss it. But also, we want to talk about risk right here on the left. So what is the risk when you take a trade? You have to know your risk. So when you're looking at the markets here, there is nothing, and I like using say there's nothing wrong with. The fact is, if you feel the market can go deeper, let me go back up to this one so it's better. Here, for instance, let's just say the market turned. Okay, you have an entry here. That's one. If the market would have turned, great. Here's another zone. This is a shark pattern, so it has the allowance to come up into this whole zone. Doesn't mean you have to jump in right away, right? So I would sit back and wait for this to shift, and you put a piece on. You don't have to put a whole position. Let's just say you want to risk up to 3%. You can risk 1%. You don't have to put the whole position on right away. Let the market change its momentum down here. You see how the market shifted its momentum? You always looking for the market to stop going in a direction and then turning and going in another direction. Sometimes you lose. Sometimes the market loses. Today we had, I'll give you an example. We had in our live trading room NZD, USD. All right, we had the hourly chart. So I'll point out something to you. We were looking at this. The momentum is up. Oops, let me just get rid of that. So let's take a look at this structure right here. Let's just take a look at this structure. All right, you can look at other things. So when you're looking at harmonics, it actually helps you trade other things better because you're always looking at Elliott wave. I like to look at the wave. I like to look at harmonics. And I'm always aware where we are in the trend. You'll always want to know where you are in the trend. So if we look at this, the market established itself a higher low, and now we're looking at this 5-wave up. Today in the chat room, the market had rallied, pulled back, rallied, and it pulled back. And this morning, we were right here working on this, all right, in our live trading room this morning. And I basically said we could start going long, and we put our initial stops a little bit lower, okay, down here, and then we raised them up a little bit. As soon as the market started popping, we basically told them, okay, exit partials here, and then the rest when it goes higher. The reason I was looking at this is we are in an uptrending mode. You see, when you start looking at understanding what part of the trend you are in, it makes it much more easier. So using the harmonic scanner will actually help you identify or force you to identify what part of the trend you're in. And you can look at other patterns. Something like this, I was actually looking for if this would have done this and done this and done this, right? If it would have done something like this, I would have been looking and saying to myself, wow, potential for, you know, we have this, this, shallow, right? And then possibly even something deeper. So I'm always drawing, sorry, I'm always drawing patterns, and I'm looking for opportunities. I'm always looking for opportunity. I'm looking for patterns. So the harmonic scanner, what it's doing for you, it's helping you read the charts. So if you look at this, and we take a look at the scanner right now, and you're flipping time frames, what it's doing, it's helping you read the markets. You see? You're training your eye. I built it to help us train our eye consistently. You start to see the patterns, all right? They just start to appear to you. So the harmonic scanner has its power, the fact that it's helping you train your eye, plus it's giving you ideal patterns. So you understand there's other not scanners, there's indicators out there. Let me show you something. Okay, let me show you something. So we take this up indicator, right? This is out there for free. It's garbage. The fact is, there's so many different ways. There's 34 patterns within this one structure, and it overlaps and overlaps and overlaps that it keeps repainting. This is where it becomes a negative to people, and they see this overpaint, overpaint. It's an indicator, and you have to physically chase the charts around. You really have to physically chase the charts around. And there's nothing, when I built ours, there's nothing else like it in the industry. Most other platforms, you have to physically draw this out, or you have to physically find the chart and be there at the same time. And when we designed ours, we had went from inside out, and we have over 20,000 lines of code within ours. It takes all the structure, it takes other things into consideration. This is why ours is pretty powerful, because when we designed it, I custom made the core from inside to out, not just having it a simple XABCD. There's other factors in terms of what we call market geometry that's part of this. So it's identifying things that wouldn't necessarily be identified on another chart. Again, when we look at trading, and I want you guys to understand this, all right? When you look at trading, and you look at the scanner, and you look at all this, all right, the market, the reason ours is hitting such high levels is because we took into consideration all these additional waves. You see? I've had people say to me, doesn't it lose? Well, yeah, well, if you look at it, it's always taking into consideration certain types of markets, certain type of conditions, and it's eliminating stuff that should not be traded. Does it lose? Yes, of course it loses. Everything wins and loses. The fact is, you want to have something that's a high odds model, and that's what we did. When I built this, my programmer decided to just continuously add stuff. We deleted it, we massaged it, and it's phenomenal. Let me show you what we have coming in the future. Hold on. Okay, for some of you that don't know, iMarkets Live has a YouTube channel, iMarkets Live, right? You scroll down, and there's other videos that you could look at. I'd put out to the public. We have Hangouts, and there's other things that I've done out there, and let's just take a look. Scroll down to Harmonics webinar. Why not? It's a good webinar. Watch it. We did a webinar here for, looks like Ninja. Okay, a harmonic scanner. Okay, let's take a look at the automated trading robot. This is almost a year ago I did this. So let me give you a little history on how the scanner came to light. I had asked my programmer to design a system for me that automatically traded. All right, so let's take a look at this. And this is actually going to be coming in our next version after the new year. So you can get pretty excited about it because we're working diligently now. We already have the technology. When we built the scanner, it was based off the robot. I didn't build the robot first and then the scanner. We built the robot. I didn't build the scanner first, then the robot. We built the robot first to see if it was possible. Then we built the scanner. So something like this. Let me show you something. Okay, our systems basically are taking all these different codes together and it's reading them as it's working. It's reading all these different codes. And it plots the levels and zones where it's supposed to be plotted. The other indicators out there, the other systems, they don't do this. All right? We have full-time programmers that work for us that do all this type of work. So you know what we have coming. And this is the next generation from the scanner where it will actually scan and do this type of work also. So you see what we got going on. I felt I'd do it in a video. So if you see here, it automatically puts your stops, your targets, and it starts trading. Let's just fast forward this a little bit. Okay. So when it comes down here, you're going to see it exit, and then the stop gets adjusted. Watch this. Bang. All right. So I'm not sure many people know we have this video out there. As the market goes lower, the stops are adjusted. We have everything on automated pilot. This is really what we have coming in the future. So the scanner, once we designed the robot, we put the scanner together. So you understand. All the work we have in here is all based on market geometry. Other companies don't have what we have. Okay, this continues. You can go search it out. So when you look at our scanners, we have certain reasons why we do things, and certain patterns show up that wouldn't necessarily show up on another platform. We have a lot of work that went to the back. So your job would be basically at this point just identifying these turning points. When the market presses and hits it, you get an alert. Great. You just want to be careful. Are you buying in an uptrend or are you buying in a downtrend? So this is ideal. What's not ideal is this. Okay? What's not ideal is the market goes down, goes like this, goes like this, goes like this. You know, it'd be easier doing with the pencil, right? Okay. Comes down. I'm doing this freehand, guys, so just bear with me. I like doing my training videos like this, and I don't like to edit them. So if we look at the market and it's in a downtrending mode, now the question is, which is more safer? To pick the bottom, like most people try to do, a bullish Gartley in a downtrending mode, or a bullish Gartley in an uptrending mode? Obviously, this would be the smart answer because you want to go with the trend. So when you're looking at your patterns that show up, just a simple search, you take a look at it and you say to yourself, okay, where is the CADJPY? Where is this? Okay, where is this in regard to everything? All I do, I go like this. Okay, I'm just showing you guys what I do. CADJPY. I take a moment. It's not a rush to rush into a trade. It's exciting. They get the alert, but we want to look at where I take the highest time frame. All right, we do like this. I take the highest time frame here, and now what do we see? You see all the structure up here. You see that? All that structure up there. So the market's telling us that this is all resistance. This is all resistance up here, and the upside should be limited. However, there's always a however. What if it breaks through, right? But the resistance, the market should stop going up. Now I start looking at our harmonic pattern, saying to myself, okay, great. Major resistance above. We're getting a harmonic sell. All I want to see now is this stop going up, shift, shift, and back down. Right? That's one way. The other way is this is to turn down, heavy, and you get something like that. You essentially want to see the market stop going up. Just because the pattern has showed that it's there doesn't necessarily mean you just jump in without thinking. That's one part of the system. Okay, let me show you some other things. What I like to do is I like to add in MACD. So we go to MACD, we drag it over. 3. Stop the video and just follow what I'm doing, okay? Just after I do it, 3, 10, 16. Colors. I like looking at blue and red. And we now have our 310 indicator. This is developed by Linda Bradford Rashke, my former business partner. I also like to take Bollinger Bands, drag it over, and I like the 50 period. So here's a 2, like that. Drag it again. Here's a 3. Drag it again. Here's a 4. and drag it again. Here's 5. Put this away, and now we're looking at something completely different. I'm looking at my Bollinger Bands. Here's one of the bands, right? The standard deviation band. You see the market's starting to find a little bit of resistance up there. It's in our zone. Okay, I'm looking at that. I'm looking at what they call a divergence. I'm looking at this market trying to go higher, making higher highs. And I'm looking at the divergence making a lower high, the oscillator. These are things I like to look at and say to myself, what are the conditions before I trade? I don't just jump in. It would make no sense just to jump in, right? Let's take a look here. Market pushing towards its Bollinger Band up here. The entry point up here falls just short. And look what the market is doing. All right. Market pulls back and giving you a little lower high. Just because the market didn't hit into the zone up there doesn't mean you can't trade that. You're establishing these ratios. Okay, you're establishing these ratios. Just because it falls a couple of ticks short, there is nothing wrong with you able to trade it. You can go in and trade it. There is absolutely nothing wrong about doing that. All right, once you establish, once you establish the higher time frame, what I like to do also, I like to look at these higher time frames. For example, this right here, this is a higher time frame Gartley pattern. So we're retracing in a downtrend. The market's corrected all the way back up, and I'm looking for the market to shift its momentum. I look at the smaller time frame, and we find our scanner, right? And I revert back to the higher time frames. This is what I do all the time. So keep that in mind. Let's look back at our USD CAD chart. Okay, let's take a look at the USD CAD chart. Let's go back to that 15-minute chart. Now we're starting to look at a little bit different picture, you see. You're expanding from the moving average. You're pushing through our bands, but by the time you get up here, you're at the third, fourth, fifth band, right? Second, third, fourth band up here. You're getting away from what they call the mean. You're expanding up here. A lot of people like to use Bollinger Bands for binary and Forex. It's a great, great tool to add to your harmonic trading. So, my name is Christopher Terry. I hope I added some value, and this is just one of our course videos that's going to be added as we go on. Thank you so much, and have a great day.